ConocoPhillips is getting some interest from investors because of its position to potentially benefit from the rising demand for energy to fuel the power needs of some of these newer data centers that are optimized for artificial intelligence. These data centers are creating a surge in demand for energy, and ConocoPhillips could be one of the companies that benefits from this trend, although there are still question marks as to how it could do so. The management team is still not purely convinced that it's going to be a huge benefit to the company, but they did acknowledge that it could be. It could be. So, if that's the case, then and investors are interested, then what's a fair price to buy ConocoPhillips stock? I'll answer that question in just a moment, and I'll share with you the methodology and the calculations I used to come to that conclusion. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So, according to my calculations, utilizing my discounted cash flow valuation model, I feel a fair price to buy ConocoPhillips stock is around $95.88. The current market price is $98.43. So I feel the share prices right now are relatively or close to being fairly valued. But let me share with you the details on how I arrived at $95.88 as the fair price to buy ConocoPhillips stock. And let me share with you one scenario where even at the current market price at $98, ConocoPhillips stock could be undervalued. Let's get started. So, according to the Wall Street analysts that are following ConocoPhillips stock, they expect its free cash flow will grow from $8 billion to $10.46 billion in 2029. And then I've forecasted from 2029 to 2034 that ConocoPhillips free cash flow will rise from $10.46 billion to $12.97. And then from 2035 onward, I forecast the company's free cash flow will grow at a long-term rate of 3%. Given that long-term forecast, my terminal value is $166 billion. In other words, if I were to sum up the present value of all of the free cash flow ConocoPhillips expects to generate between now and the very, very long term, it would total $123 billion. The discount rate I used for ConocoPhillips is 11%. I used a 7.5% cost of debt and an 11.88% cost of equity. I used the company's beta of 1.23, which is the beta according to Yahoo Finance, a risk-free rate of 4.5%, and a market risk premium of 6%. The company's market cap was $129 billion when I made this calculation, and it had total debt of $18.3 billion. Given that structure, I gave them a target capital structure of 20% debt and 80% equity. And that's how I arrived at my weighted average cost of capital. Arriving at the price per share, I took the value of operations, I added the company's cash, reduced the company's debt, and that gave me a value of equity of $111.5 billion. But since I want to know the price per share, I divided by the number of shares it has outstanding at 1.163 billion. And that's how I got the $95.88, which is just a little bit below the current market price of $98.43. So according to that calculation, ConocoPhillips stock, their shares are fairly valued. So I'd be curious to hear what your thoughts are in that calculation. If you think it's overvalued, if you think that I miscalculated something, I added a number that was too high or too low, I'm curious to hear your thoughts. But let me share with you a scenario where ConocoPhillips shares could be undervalued. So recall how I said the company's beta is 1.23 according to Yahoo Finance, right? So if you believe that the beta shouldn't be 1.23, that it should be lower, that it should be 1. And remember, beta is a measurement of risk. Beta measures ConocoPhillips share price movement compared to the share price the movement of the S&P 500 index. And it measures that over several years historically, 5 years historically. And so if the S&P 500 index moved 1% over the previous 5 years, ConocoPhillips stock moved by 1.23%. So it's 23% more volatile than the S&P 500 index. But just because that was the historical risk doesn't mean that's the risk that you should always use for the future. Sometimes there are situations where you might want to adjust that beta lower or higher depending on the circumstances of the business that you're following. And so, given that ConocoPhillips could benefit from this new surge in demand for energy driven by data centers optimized for AI, that could mean that there's a next leg of growth for ConocoPhillips business, a more stable source of demand for ConocoPhillips, and maybe the beta instead of 1.23 should be 1. And so I modeled that scenario, and the intrinsic value per share under that scenario where the beta is lowered to 1 means the share price, the intrinsic value would be $112.87. So in that scenario, you have a situation where ConocoPhillips shares could be undervalued by roughly 10% or 12%. So in conclusion, I would say that it would be prudent, instead of trying to have a pinpoint saying precisely what the share price could be, it might be more prudent to give a range and say that a fair price could be anywhere between $95 a share and $113 per share for ConocoPhillips stock. And the current market price at $98 fits in that range of fair price, fair valuation for ConocoPhillips stock. So it's certainly an interesting business. Understandably, investors are curious. The data centers optimized for AI is the biggest growth engine right now in artificial intelligence, and ConocoPhillips could be one of the companies that benefits from that increase in demand. Although management did put some water on that fire to try and, decrease expectations from investors for that. They even said, like, look, even if demand increases, we don't expect price for our liquid natural gas to increase. Even if demand increases, we don't expect the price to increase with the increase in demand. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.